Good morning students, welcome back to today's class. Today we are going to see that chapter 7, Depreciation, Production and Research. This is video number 5. Through here we are going to see that method of calculating depreciation. So here you can see that what are the main methods we use to find out that depreciation. So first of all that you understand that if we are using different method, we are not going to get the same answer, we get that different answer. Clear, no? In maths, if we are putting some equation or different equation for the same thing, we get that the same answer. But here it is not like that. If we are using different methods, we get that a different answer. That amount will be varying. And so the use of that particular method is depend on that. One thing is that according to that the policies of that the business, and another is that according to that policies of the government. Both are matching in our internal purpose. That means for the firm's purpose also it must be matching, and at the same time with the government also. Means you already learned that it is accepted in that income tax also. Paying that tax, this depreciation amount is reducing. So some firms what they will do, in order to reduce that tax, they will show that more amount as the depreciation. You understand? Yes. If this money this what is this gold, this cost is at 2000, and in morning we calculated that almost 200 we can reduce our depreciation. Instead of that, this is with a different method. I said that a different answer will get. According to that, here it is showing that maybe 500 as a depreciation. Now you see that how much variation is there. You understand? No? According to that, profit will reduce. This is considered as an expense, and in that time, profit will reduce. Then that reduced profit only we get. Over that we are paying tax. Actually we know that if we are showing like depreciation as expense, that amount we are paying to anybody? No. That is a non-cash expense. We had seen that that is a non-cash expense. That means this expense money we are not paying. If you purchase a pen, you are paying money to the shopkeeper. Clear, no? But here you see that if you mention depreciation, already that money we paid when we purchased that bond. Thereafter only in each year how much we made use of that, according to that we are reducing its value from the book. But we are not paying that money to anybody. So we call it as that non-cash expense. So even though we increase that expense from 200 to 500, for us there is no much difficulties, because our money is, this 500 is with us. Or if we found that only 200, means that 200 is with us. This is in order to cheat that the government. If we increase that or that much money, if we put as that expense, our profit automatically will reduce. If less profit means we need to pay less tax. You understand, no? Yes. So tax will be less. That is why it is saying that so government will give some policy, means rules and regulation to use particular method of depreciation, calculation of depreciation. Here so many methods are there. Among that we learn only two. One is the straight line method, and another is the written down value method. Two methods we are using. In straight line method means, here first of all that we find out that the depreciation, and in each year the same amount of depreciation is charging. There is no variation in the amount year after year. That means each year, according to this method, we assume that product usage in every year is the same. For example, in case of board, this blackboard, we know that its usage is same. Its usage is not going to increase or decrease in coming year or past years. Whatever purpose we put this board here, the same purpose, the same benefit we get that in the coming years also or in the past years and the same. You understand now? That means all some cases this method, this straight line method is good. You take that example of that blackboard. Its usage is not differ and benefit what we get from is also not going to change. Clear now? So in some cases we can use that method, straight line method. So in that straight line method there is one formula also, very simple formula. So for easiness, I change this amount. The board amount we assume that 2,100 rupees. Okay. You just imagine that the price of board is that when we purchase and installation, including installation, that board price come up to 2,100. Now we assume that 100 as the scrap value or net residual value. That value we are reducing. Understand now? Yes. And if this board we assume that 10 years we can use. So that number of years, 10 years. That means the cost of asset minus net residual value upon number of estimated year. Clear now? This is a formula. Got clear now? So according to this, you can see that depreciation is at 2,100 minus 100. How much is that? 2,000. No? Yes. Upon 10. How much is that? 200. That means in each year we need to write off 200 hours depreciation for this board. Each year, same amount. There is no any variation in that depreciation amount. Every year we reduce at 200, 200, 200. By that, when come in the end of the year, this become 0 or come as at 100. In that price we can sell it. Clear now? Yes. Or final. That much on rupees only will remain, that is 100 rupees in the book. That all other amount we from each year, not 1 year, in each year we mention as the expense. That means from our profit, that much rupees is already kept aside in the form of depreciation. Got clear now? Yes. So this method is known as the straight line method. And to find out the rate of depreciation, that means up to what rate the depreciation is taken place. To find out, we can use one more formula, that is rate of depreciation is equal to annual depreciation amount upon acquisition cost into 100. So annual depreciation amount we got that is 200. The acquisition cost is at the value of that asset, 2100 into 100. This formula we use. You find out that, okay. This as an example only. So in this way we get a certain percentage. That means percentage we consider as the, we can find out, okay. That much percentage we consider, we say that this much percentage is the yearly depreciation. Clear now? Yes. So we can see some of advantages and limitation of straight line method of depreciation. First we can see that the advantages of that straight line method. First of all, that this very easy. You know that by seeing itself you understand that this type of depreciation is very easy. Once we identify its residual value, its estimated lifetime, and then we can easily calculate that depreciation value as just before. From that the cost, original cost means in accounting cost, that means up to that installation charges. From there we depreciated that residual value. After that we divide with the estimated years, useful years, then we get that depreciation amount. Thereafter we no need of finding out that depreciation every year. We need to just show this depreciation amount each year in our profit and loss account. When you are learning that profit and loss account, you will understand better where how it is charging in the profit and loss account. So every year we will reduce from our profit and loss account the same amount, 200, whatever is that the amount we got, that much amount we reduce every year. You understand now? So this method is very easy to use. One advantage is that. Second is that asset can be depreciated up to the net scrap value, and another thing is that we can reduce that, or we can depreciate, we can write down that the asset value up to that the residual value. Residual value we already reduced it. For example, in the previous one we had seen that in 2001 we reduced 100 rupees, that means 2000 rupees. This up to 2000 rupees we can make as the depreciation. You understand? Upon this we are writing that how many years. That means each year 200. Like that within 10 years this 2000 will be over. Remaining is that this amount. If possible we can sell it is out of that 100 rupees. That means within that period we can depreciate that complete amount. Without any amount remain, we can write out that entire amount. That is another advantages. And another is that every year we used to write down the same amount for the depreciation or as depreciation. So the comparison between the profit of different periods are very easy. If we want to compare that comparison is very easy. For the profit comparison, this method is very easy. Actually, you know that some businesses are using 2 or 3 methods at the same time. For the government purpose they use another method, for their internal uses they use another method. That is also possible. Okay, just in between that I said. So another third benefit is that this method, as I said, that is helpful for the comparison in case of profit. Next we can see that fourth one, this method is suitable for those who asset whose useful life can be estimated accurately. That means in some assets its expiry time or the useful lifetime we can accurately calculate. In that situation we can use that straight line method. If exactly around in that time it is not better, but it is better in that which are the assets its useful lifetime we can estimate before accurately. You understand now? Especially for that lease agreement of that building and all, in that time period is fixed. There is no any change. In that time, each year we can write that for example the lease contract we taken for that 10 years. Then 10 years the time we can accurately find out that the time period in that type of business for the depreciation purpose we can use that straight line method. Next we can see that limitation of straight line method. The main limitation is that this method is based on faulty assumption. That means we are imagining or we are assuming that every year that particular asset is having same usage, but we know that it may vary. According to us, according to accounting concept, how much we made use of that much only, or according to in that proportion only we can write off that expense too. You understand now? Revenue and cost must be matched, means in what proportion we made use of that, or in what proportion we got the revenue over that or by its use. In the same proportion, in same ratio only we can write off its expense. So here you see that that usage, if, by using straight line method, the usage may be varied. For example, this blackboard, just for your simple understanding, take that blackboard. If every year, if blackboard once we brought here, we are assuming that the same depreciation. 1 year if you see that we didn't use this classroom, entire classroom, according to that this board also we didn't use. Just you imagine that. But in accounting concept, what is that? It is in use, and we write down that according to that depreciation, straight line depreciation method, we reduce at the same amount. But we didn't make use of that thing. Just this type of things will not happen, but for your simple understanding, I said that you got clear now. Means how much usage is there according to that, but that is not applicable in case of that straight line method. We cannot make use of that. For example, school bus, you see that now last almost 2 years it is not using now. But depreciation when calculating under straight line, if using that straight line, then depreciation amount is the same. There is no difference. You understand now? But actually you know that that is not in use now. That another is that another main problem is that is some asset like vehicle and all, easily we can identify that by usage. The beginning years it may be good working condition, and when years pass it requires more repairs, maintenance and all, so according to its efficiency may reduce. In that time we cannot make use of that much, so the depreciation charges normally in normal sense, if we are thinking, it will be high than that of some other assets. For example, this furniture and all, we can think that we can make use without much maintenance. Maybe that painting or something only is required. Without much repairs or maintenance, we can make that use in the same year, all the years or same way. That means how many estimated useful time is there. In that all the years we can use without much maintenance or repairs. But you see a thing that like asset like vehicle and all, it requires more, or machines, it requires more and more repairs and maintenance. When you know that when going to that year after year, that maintenance expense or that repairs and maintenance are increasing. You understand now? So according to that, efficiency is also reducing now. Means what benefit we get from that machine is also reduced. So if we are using that the straight line method, the beginning years it may be correct, but when come to that the end years it may not be correct. Clear now? Yes. These are its main limitation and merits. Okay, thank you.